gold price maintains its offered tone amid receding safe haven demand. Hello and welcome. Thank you for joining me. I'm your host. In this video, we will focus on the gold price in the context of the current macro environment. As you can see on your screens, the price of gold is edging lower today. It's hovering around $1,820 an ounce. The safe haven demand for gold is receding as we speak. And let's talk about the reasons why that is the case and what to expect going forward. As you can see here on the weekly chart, gold did perform very well last week. It rallied nearly 6%, fueled by the risk-off sentiment caused by a number of central banks globally continuing to hike interest rates aggressively. Of course, the latest CPI report from the United States came in significantly higher than expected, which fueled the safe haven demand for gold last Friday. However, since then, things have changed. As I mentioned earlier today, the safe haven demand for gold has been receding. The reason why is that investors started taking profits after the recent rally. Additionally, some market participants see the recent move up in gold prices as an opportunity to enter shorts. Now that could be one of the reasons why we are seeing gold edging lower today. Another reason is that the dollar is moving up today. As you can see here, the dollar index is at the highest level in over 2 decades. Of course, the dollar strengthening is a headwind for gold because it makes the metal more expensive for those who hold other currencies. For those of you who follow my content on a regular basis, you know that I often say that the gold price is highly dependent on the dollar price, and that is still true. One more factor that is weighing on the gold price today is the fact that the yields on U.S. Treasuries are moving up. As you can see here, the 10-year Treasury yield is at the highest level since December 2019. When the yields on U.S. Treasuries move up, the opportunity cost of holding gold increases, and that is why we often see gold and silver moving in the opposite direction as the Treasury yields. So, to sum up, the gold price is maintaining its offered tone this week. The support at 1,815 was barely tested today. In order for the gold price to resume its uptrend, the safe haven demand would need to increase. And that might happen if we see geopolitical tensions rise, or if we see the CPI reports coming in hotter than expected. Thank you for watching. If you enjoyed this video, you might also want to watch another one where I shared my weekly gold price forecast. Have a great rest of your day, and I will see you in my next one tomorrow. Take care.